Now, the platinum strike, along with poor economic data, is crippling South Africa's economy, which is headed for a possible recession. Kevin Lings, economist at Stanlib, joins us for more. Kevin, good morning, and thank you so much for joining us.
Sure.
Now, you've put out a note, in particular, looking at the manufacturing data, and you've chosen to focus on the positivity in the story, and that's the month-on-month numbers as against the negative trend we're seeing quarterly and annually. Why?
Look, I think there's a lot of attention on the second quarter GDP, because obviously if that number's negative, then we're in recession, and I guess psychologically that's quite important. So I think it's crucial to understand how the second quarter is unfolding. When we look at manufacturing, it's a key sector in South Africa. It had a very poor first quarter. But if I look at the April number, which you're referring to, it was up month on month, 3.5%. Now that's meaningful. Okay, so we still got to wait for the next two months in the quarter, and they may be bad, I don't know. But at the start of the second quarter, I would say that's a positive start. And if that start continues for the rest of the quarter, then you're going to have positive growth for manufacturing. And I think that's important to try and assess what's happening to the trend. Are we seeing ongoing deterioration month by month, things are getting worse, or do we see a little bit of stability? And I thought the April number showed a bit of stability, 3.5 up. When I break it down sector, remember we've got 10 big manufacturing industries or subsectors. Most of those grew in the month. So it's not as if it's just one sector. Obviously food was the biggest growth, so we had a nice rebound in food production. We had a bit of a pickup in motor vehicles, but iron and steel picked up. These numbers are off a low base, but it's saying that relative to March, April was better. Now, going into the April number, many analysts ahead of it thought, gee, we're going to get another shocking number. We've had public holidays, the economy is under pressure. It didn't quite turn out that way, and I think we need to highlight that.
In fact, if you take the public holidays, maybe it could have been even better, an even better improvement if you factor in that there was some lost productivity there. What about the argument, and one senses from government side and Reserve Bank and Treasury side, trying as best they can to put the most positive thing on, not wanting to go below that 2% number for the estimate for growth. Well, do you think it's a reasonable thing, as Jill Marcus, I think, said, and others have said, if it wasn't for mining and manufacturing, we'd be easily at 2% growth? And the analogy I drew, being a soccer week with the World Cup opening, is that it's like saying we would have won 1-0 except that they scored a goal, so we didn't. Yes. I mean, mining and manufacturing is part of the number. So it's a big part of the number. So you can't say, apart from that, you know, we did okay.
No, you can't do that at all. Sometimes there is, if it's agriculture, you can perhaps exclude that because you know it's highly seasonal. But in this instance, no, not at all. The linkages between mining and manufacturing to the rest of the economy are enormous. So if manufacturing takes a knock, it affects transport, it affects ultimately finance, it affects consumers, retail spending. And the same for mining. So no, this is a real concern in terms of the weakness in the domestic economy. And there's also no doubt that it's feeding into other sectors and dragging those parts of the economy lower. What you could say is, yes, the rest of the economy, it's not as if every sector's in recession or every sector's declining. Finance is growing at about 2%, retail is at about 2%. So the other parts, big parts of the economy that are holding up to some extent, but mining and manufacturing are so integral to this economy that if they're weak, the economy feels weak.
In light of the discussion we've just had now and our expectations for Friday from the rating agencies, let's put that into the concoction. What are we likely to see come out and the implications for the country?
Look, I think this is a crucial announcement. Obviously, we're expecting Fitch and S&P to announce. They have to give updates now in terms of the rules on a regular basis. So they've said they'll do it every 6 months, and Friday's the first one of those, and then we'll have another update in December. What's key is what do they do with, obviously, the overall foreign currency rating? That's kind of the big rating, if you like. I think Fitch, which has us currently on a stable outlook, may well revise that to a negative outlook. Fitch focuses quite a lot in how they assess your economy. They focus a lot on the growth dynamics, on social dynamics. And if you look at Fitch's own forecast, they recently revised that down very dramatically. They're now expecting 1.6% for this year and only 2.2% for next year. Now that's incredibly low as a forecast, especially for next year. So I'm expecting Fitch will downgrade us to a negative outlook and then have a look to in December, and if things don't improve, we get a full downgrade. Standard & Poor's is obviously the big one. I think on the domestic credit rating, remember that when they get a credit rating, they give you an international rating and a domestic rating for domestic bonds and instruments. I think they downgrade our domestic rating because that is higher than our international rating. But I think they leave the international rating on a negative outlook and maybe just give us a little bit more time.
What about Jill Marcus's comment when she was talking to people yesterday? You were at the breakfast that she was at, saying, now you also, talking to the audience, you also speak to the ratings agencies, and unfortunately we South Africans talk ourselves down.
Very much so. So I think we exaggerate some of the negative, and so that has a feedback loop that goes back to international investors, rating agencies. And I think there are some good stories out there, but I don't see them getting much headline news. And
just name one.
Tourism, I think tourism. So yes, I mean, we've introducing the new regulation on child travel, and the story is that that's going to hurt tourism, but overall tourism is at an all-time record high. Our exports with Africa are doing stunningly well. Warehousing as an area of investment is superb. I think there are some good stories out there, but I think that we tend to beat up on the negative a lot, and then that becomes a bit self-fulfilling. And you see it, I think you see it in the confidence indicators. The consumer confidence is incredibly weak, and business confidence.
Good stories to tell, I told you, David. Thank you so much, Kevin. That's a big thank you to Kevin Lings, economist at Stanlib.